Okay, now we have asset books. We already discussed about corporate books and tax books. Now we are going to create our asset books in the system. Now the concept is already clear. What is a corporate book and tax books? I'll just directly go to the system. So our data security works at the book level in our assets module. Okay. So if I give my book class as corporate here, I do not have an associated corporate book, but if I choose a tax book here, I have to give an associated corporate book with it. So as I said earlier, whenever you create a tax book, it is always associated with a corporate book. And I will choose my ledger here.
Ashish, what mandates how many corporate books versus tax books you would have?
No, so per ledger, you will have at least one corporate book. Tax books depends on your requirement.
Okay.
So corporate books you'll have one per ledger, but tax books it depends. If you want to have one or two tax books, you can have that. Like in one of the business scenarios where I was working, we created three books, one corporate book, one tax book, and one lease book. Like the business had leased assets. There were some owned assets, there were some leased assets. Okay, so in the same ledger they had that. So I created a. It was type was as corporate book only. I do not have a type as lease here. So I had for the same ledger I had a corporate book, a lease book, and a tax book. So in that business scenario, they wanted to have the leased assets in a separate book. To just have it separately in book because there are hundreds and hundreds of assets that were leased. It was not one or two assets which was leased. So they wanted to track it separately.
Oh, okay.
Okay, I'll choose my calendar. This is my depreciation calendar. Now you asked me a question. Whether this date, what is whether you have to close the all the periods from 1950 and all. No, the answer is no. You do not have to close all the periods. You will choose current period here. So this is the reason you don't have to close and open the periods from 1950. Though you can have the calendar from that particular date, but you don't need to open and close those periods because why 19 is not coming here. Okay, this is my cancel this. I created the calendar from 19. Why it is not coming here? Let me check my calendar once. I have 2019 here in my Acme Cal. For some reason, this is not appearing here. Let me choose this only right now. Okay. This ideally this should come 2019. For some reason, it is not coming here, but I can choose that. Okay. And then we have divide depreciation. We have this divide depreciation by days and by evenly. So the meaning of this is when we create the depreciation, it is not just by prorate calendar. Uh, Prorate calendar tells the system from when to start depreciating for the first month. But next month, what will happen is uh, for next month, how the system will divide the depreciation, whether it is evenly, like evenly for if the depreciation is for 12 periods, or it will say by days, like some months has 30 days, some months has 31 days, some months has 28 days. So it will be number of days, or evenly, like even if it is February, it is 28 days, the amount is the same as the month of January. So it can be evenly or it can be monthly. Then we have certain checkboxes here. Depreciate in the retired in first year, so you can enable this. Allow amortized changes, so if there are, these are different concepts, so amortizations and any leased assets are there, so you are creating amortizations and all, which we'll discuss that separately. Any cost signs, impairment, so there are a lot of things available here. I'll just have the mandatory things. Allow leased assets. Leased assets are nothing, just the rented assets. So if you want to have the leased assets, you can enable it. Use payables invoice date as placed in service. Now, as I said, we can bring the assets from our payables module as well. And you want to use the payables invoice date as date placed in service. You can put that over here. Allow unallocated payables invoice lines. So when the payables lines come in, we can have all the lines created as separate assets, or we can merge all those lines and create one asset. Let's say you have a payables invoice, you have 3 lines in it, one item line, one freight line, one tax line. So you have 3 lines in it. All that can be clubbed into one asset, because tax and freight that you have paid, that is for that asset only. So you can club that into one, or you can exclude it. So you can have an allocated or unallocated line there. So all this suspend automatic merge of payables invoice line. So automatically it can merge in the system. If all the lines are coming in into one asset, or if you want to do it manually, you can say suspend automatic merge. I will do myself, like 3 lines I'll merge together, 2 lines I'll merge together, and all those things you can specify here. And then in the bottom section, I have to specify all my accounting codes. Okay. Now I will explain the meaning of this. Now account default is something which you choose at this level, like this combination will be used, but only the natural account will be separate for each of these. The combination will be same, like it is 01 entity, 000 line of business for all of this, because everything should go in the same combination. Because when you are balancing your accounting entries, your gain, cost of removal, everything should go into company one or whatever line of business or department you are using, but just the natural account will be different. That's why we just have natural account here. This is account default. So this is just nothing, just value, some value I've given here in the natural account. These are my actual natural accounts that I will be giving here, but this combination will be used except for the natural account here. So you can give a gain and a loss account or something here. I'll use any expense account here. So for ideally in normal business scenarios, you will have different account here. Okay, cost of removal. Now let me explain this. Uh, what is proceeds of sale gain and loss here? What is proceeds of sale gain? I gave you an example, like the total accumulated depreciation of that particular asset is 36,000 in the previous example that I gave to Ramesh earlier, and the total asset cost is 60,000, right? So in those scenarios, if uh, the remaining balance of the asset is 24,000 and you're selling it for more than 24,000, for 25,000 or 26,000, you will have 1,000 or 2,000 as profit in that case. Now that will be your profit that comes to your sale gain and sale loss account. If it is a loss, it will come to your loss, and if it is a gain, it will come to your gain account. Okay. Cost of removal, like for example, for removing also you can incur some cost. So when you say I'm removing an asset, I'm throwing away the asset, but there is some cost involved with it because you have a plant and machinery to throw it out of your factory or something. There is some you want to deassemble, like do that particular, you want to call the scrap person or something, you want to remove that asset and all those. So there will be some cost involved with it, right? So those costs you can track it here, and it will include that cost in calculating the profit. So if there is cost of removal, it will reduce that cost as well from the asset cost. It will reduce the accumulated depreciation. Then it will check for sale of proceeds, whatever money that you have received after selling it, and then it will calculate the gain and loss for it. Let me change this. Any questions so far? It's taking some time for some loading. Usually this doesn't happen in all the instances.
So Ashish, I'm seeing like you are using both values, enterprise
This I have to change this to common
and
here.
common for reference.
I have to change this to common. This comes as by default here.
Oh, okay.
So I'll just change this to common. It's still loading for some reason. So if you have a specific reference set for each book, you can specify that. For all of the setups for depreciation methods, calendars and other things, retirement types and all the things, I'll use the common set.
Are these like business unit specific?
No, this is book specific. You do not have business unit in fixed assets. This is for this
Okay.
book.
Okay.
Yeah, if you want to refer it to AP and AR, it is, yeah, book, you can say as business unit, but it's a separate thing. But yeah, it is book specific.
Okay. So how like in AP and AR reference
Works at the business unit
set is
level, you
used
can
in
refer
context of
the,
business and sets are used.
correct. So it's used in the context
Okay.
of books here.
Okay.
Like you have this business unit set assignment, right? You go to business unit set assignment, you have all the setups listed down. For each setup, you can have a different reference set
Right.
for that business unit. So similarly for each book, these are all the fixed asset setups. For each book you can have specific, like I don't want some depreciation methods that I saw to be available for other books. So I'll say I'll create one Acme reference set here. I'll attach that Acme reference set to my depreciation method in this book, and I will attach the same to my depreciation method also. So that depreciation method will not be available for other books. It will only be available for in this book.
Okay.
How many books can an enterprise, asset books can an enterprise can have? A company. I mean, this is.
No, you can create n number of books. There is no restriction as such.
So what is the determining factor, like how many asset books has to be?
How you want to segregate your assets. Like if whatever companies you have, usually we create by the companies. So number of companies that you have, you will create those number of books. Even if they are in the same ledger, you will create those books in the system.
The companies in a way that you're talking about the business unit.
No, the legal entity.
Line of
The
credit,
legal.
what is the line
Yeah,
of,
the legal entity or the balancing segment value, you can say. So the number of legal entities, because you give these accounting codes based on that, right? So you give 0, 1 value to it. So based on the legal entities, the number of legal entities and registered entities, you create those many books. Because every entity will own the assets. We create the balance sheet and all entity wise, right? Legal entity wise. So for each entity, we will have the assets in that book. If you want to further segregate based on certain capitalized assets, leased assets, you can further categorize using the same company code, same ledger, like 2 books. Like I created that for some of the client. Let me see what else I have here. Okay, so I'll let this save. This is still loading.